and the bank wants the spouse to sign off on the refinance so that if they need to foreclose, the spouse, even though they're not a title holder to the property, still having some homestead right because it is their residence, cannot prevent the foreclosure. So the bank or the closing agent may suggest to the parties, well, here, just sign a deed putting it in both your names, and that'll make it very simple, and then we don't have to worry about all this, and we can give you your loan. Well, that's certainly not what you want to do if you're trying to keep the marital home non-marital. Mm-hmm. So you want the other spouse to execute the waiver of homestead or whatever other documents other than a deed that the bank or closing agent presents. And again, they're financiers, they're closing agents, they're not divorce attorneys, they're not looking out for what is the effect of this transaction on your premarital and non-marital property rights. They just want to get the paperwork done so they can close the mortgage and move on. So you need to be very careful when you're refinancing a non-marital piece of real estate or any other non-marital property that has a title, such as cars, boats, airplanes, that you're not inadvertently creating a commingling of property or a gift to your spouse because the bank or the lending institution or the closing agent gave you some papers to sign.
Now, what effect does this have on rental property?
Well, the rental property situation, if it's premarital, non-marital rental property, and you want to keep it that way, as I said before, you can keep it in a business model. You maintain the separate books. You make sure that the rent generates enough money to finance the property so that you don't have to put any marital funds into the property. You try to minimize the spouse's active involvement in managing the property so they cannot claim any kind of joint venture under tax laws or other laws that would give them some bootstrap to claim that it's now marital property. So you just want to keep those entities separate and distinct and self-supporting. And while the spouse can occasionally run and pick up the rent check from the tenants or simple things like that, if they get too involved in the day-to-day management, start signing leases for the tenants and things like that, then you've started creating the presumption that you've either gifted an interest to the spouse or at least commingled it.
And you also don't want to put them on any type of boards of any business that you would own as well, right?
Correct. You want to keep everything separate in a business model.
Another issue that comes up dealing with clients coming in for a consultation, in which you have addressed in your articles, maintaining separate bank accounts.
Yes, that's similar to the refinance issue. Bank tellers, loan officers, account administrators, whatever they have at your bank, aren't looking at the divorce issues or the marital property issues. So they will propose that everything be a joint account, and that that's the simplest for them. Most deposit agreements provide that if you have joint accounts and you also have individual accounts, the bank can move money back and forth between the accounts to cover overdrafts and other problems with the accounts, because you're a depositor with the bank, even though you have multiple accounts. They can move money around to protect themselves. So your joint asset account could be used to pay an overdraft on your individual account or vice versa. Again, that creates a problem of possible commingling. So it's best to keep your individual non-marital or premarital bank accounts in separate financial institutions than any of your joint marital bank accounts, so you can't have this inadvertent commingling.
Another issue that you address are retirement accounts and keeping potential retirement. I guess some retirement accounts, you write in your article, will be non-marital regardless of if there's a prenuptial or premarital agreement in place, right?
Well, again, we've seen in this current society people changing jobs frequently, which 50 years ago was not the case. So you may have multiple retirement accounts, particularly 401ks or IRAs, from various phases of your employment life. Some of those will have been prior to the marriage. You don't want to roll over your premarital retirement account into a retirement account that contains contributions from after you get married. You want to keep them separate. Now that may, again, create more of a paper trail problem, more of an investment monitoring problem. It may not be the best financial return on the investments depending upon the limitations that you have, but it's going to preclude or at least substantially prevent a claim that non-marital retirement account has somehow been converted into a marital asset.
So what you're saying is you could have a non-marital retirement account, keep it separate, but if you put anything from that account into a marital account, then could that non-marital account be potentially considered marital?
Exactly, and again, depends upon the laws of the states involved. In Illinois, you could do a forensic accounting of the funds and try to segregate the non-marital versus the marital. Illinois, under some circumstances, only requires that you contribute the money back to the marriage that you put into the non-marital account. Other states may say that by doing that, you've converted the whole account to marital. So it's very important to know the laws of the state you're in and where you move to from time to time, because those are the laws that are going to determine whether your transactions created a problem for you. But of course, my premise in the article is if you keep everything separate and avoid having to even defend making those kind of transactions, you're better off.
Now, what happens when people come in and say that they have toys such as motorcycles or other cars or boats that they say are non-marital, but their spouse enjoys the same benefits of these particular toys as the client does?
Well, the use of the toy is not going to create a marital interest. What we commonly see is the 66 Corvette that he's had since 66 or 76, whenever he got it, got married in 2006, but in 2008 rebuilt the whole engine out of marital funds. That's where you create the problem. So if there's any way to maintain that property without investing marital funds, or in that case maybe the premarital agreement to protect that antique or other toy would be the better way to go, and recognize in the premarital agreement that you will be putting money into it during the marriage, but she agrees that that's not going to make it marital property and that you're not going to have to reimburse her for those expenses. If you have a lot of toys, you really need to talk to a lawyer about how to protect them.
Now, can you make the argument that if you have the 66 Corvette, you're married in 2006, but in 2008 you used marital money to either rebuild part of it or just for the upkeep, that the only marital interest would be what value was increased by that upkeep or by that repair?
That certainly would be the case in Illinois and in many states. But again, without looking at the laws of any given state, we can't determine how that would be treated universally. That would certainly be the argument to present, as with any commingling argument, that the marriage is only entitled to get back what it put in, plus any increase in that value during the marriage, and not the entire asset.
Okay. Well, unfortunately, we're out of time, but I appreciate you taking and spending some time with us to discuss this article that is extremely helpful to individuals who are trying to keep the majority of their property non-marital, and it's got some good points of what to do and what not to do. For a complete review of this article, you can go on DadsDivorce.com, and we have posted the article there. Also, we will be having other podcasts which deals with separate property in the future if you want to tune in on DadsDivorce.com and check underneath the podcast. But Richard, thanks again for spending time with us, and look forward to having you on again.
Thank you, Dan.
Thank you.